The semiconductor tariff is the biggest risk factor to our outlook and export going forward in the second half. And seeing that the auto tariffs coming down for Japan, actually, previously we thought it would be more durable than the reciprocal tariffs, but having that seen come down, we now see potentially semiconductor tariff getting some flexibility, but our base case does assume that it could be announced and could come into the picture before it gets reversed, potentially within a quarter or so, given that there's no alternative for the U.S. customers in terms of supplying their chips other than Korea or Taiwan. So in that sense, we do think there will be still continued uncertainty. I think that's the important factor, not necessarily the certain rate of tariffs that we're expecting and how we can translate that into growth picture, but given that there is still a lot of changes ongoing and uncertainties and a lot of variables, I think that's where the market seems more cautious around at this point.
Gotcha. I understand about the continuing ongoing uncertainty, but the optimism that you referred to, with the Japan deal, right? It seemed as though Trump's template for tariffs, right? That just changed overnight with the Japan, right? Autos was supposed to be 25%, then it seemed as though Trump decided overnight, well, that's just too much trouble, right? Let's just make everything 15%. And you're saying the hope is, if the template is changing that way, that could spare South Korea, could spare the ship makers.
The goal is now 15%. Now the bar has set higher for Korea. Now Japan has gotten a positive deal. And so that could actually come in as both expectations factor, but also a lot of pressure for the Korean negotiators who are now carrying out the meetings in Washington. For us, the President Trump changing his stance quite dramatically actually does raise a concern that he could turn around again to the other side in the future. So again, I think uncertainty is still high, so that's what we're seeing as the biggest risk factor going forward in the second half for Korean economy as a whole, both on the external and the domestic side related to export sector.
Who is going to eat the tariffs? Because I think the street is very divided in terms of where inflation, who is eating the tariffs? Is it going to be U.S. importers necessarily, or is it foreign exporters who are trying to sort of ride out the wave for now and maintain the market share and share some of the burden? Do you think it will happen with South Korean chip makers or many other exporters out of South Korea?
Sure. Looking at the automakers, for example, we've had the sectoral tariff from April, and Hyundai and Kia, they were able to transfer the prices onto the U.S. customers. They were bearing it with cutting the incentives to the U.S. dealers rather. But by the third quarter, actually, the price margin pressure would have come up, and that probably would have let them had to transfer the prices there. But given the trade deal, we'll see how it goes. But eventually, our expectation, our Morgan Stanley view, is that the tariff prices will be transferred onto the U.S. prices and then reflected on the U.S. CPI, hence delaying the Fed cuts to next year. So in that sense, I think eventually it will be the U.S. customers who could suffer, as well as the exporters who so far had been bearing these margin pressure, but eventually will have to transfer it onto the U.S.
If these trade negotiations actually drag on, I guess, in that case. Just going back to the fiscal profile of South Korea, just because we spend so much time talking about the fiscal situation in the U.S. and now Japan is also being talked about for that problem. Is South Korea okay spending money? Could it potentially strain government budgets? Every now and then we get headlines, reports suggesting, how much of this revenue shortfall is going to impact the government there.
Of course, fiscal deficit's been annual theme for now fourth year for Korea. And it's actually extended the deficits to negative 4.2% because of the second supplementary budget. And we do think the government that also increasing to close to 50% of GDP is something that we should monitor. But considering the previous government under the conservative administration, we've had a very tight increase in annual budget. And because the growth is so weak, we do think the fiscal expansion to a certain extent is manageable. And then when we have exports potentially turn around in the future and consumption recover, then that's when we should think about fiscal tightening or managing the sound fiscal condition then. But I think next year or 1 or 2 years ahead, given the external headwinds, the fiscal expansion at the cost of a little bit of a deterioration on the fiscal conditions front could be bearable.